Alright guys, welcome back into another weekly recap. What we're going to do today is just have a look at what happened the previous week, last week, and an overall high time frame view on gold, Bitcoin, and also euro dollar. So let's start with gold. What we're going to do is also looking at what happened last week, if we had any relevant report, figures, economic indicator, and have a look also next week, the week that is starting tomorrow. So let's start with gold. So if we jump on the hourly time frame and we are looking at January as a whole, we can see for sure that the price has been moving into this range, even less like this, and these lows over here. So even especially we go there, even better. I mean, this should be a band of sensitivity. So there it is. Okay, a sort of sensitivity area, and the same happened here. Around this area, because as you can see, price reacted multiple times, and these are the highs and lows of this consolidation range we are in. As you can see, last week we were in a quite overall high time frame bullish trend. We were printing new lower high, higher lows and higher highs, higher low, higher high, higher high, higher high. This is a all higher low, and before we faced this strong, as I just told you, this strong resistance supply area around 1830. And as you can see, we also had this intermediate PSA, which was 1815, which was very relevant from the 4-hour time frame, because this was a 4-hour week that closed exactly at 1815. As you can see here, now is giving very strong reactions over there in this under 30 pips range. As you can see, not a single hourly candle closed below, and we cannot even say that the pressure is from the sellers, because after each bounce, price has been able to print new high or equal highs. Now we're going to see, now we are at this moment where the price can either start to make lower highs, so we can start to identify and see a wedge with a possible squeeze up or a squeeze down with strong closures below 1815, or with very aggressive candles and closures above 1830. This is pretty only technically, and but for now we are in a very structured consolidation period, giving us opportunity to trade between the PPLs, the key levels, to take advantage of scalps. What happened this week on the dollar? So what we had was most important on Tuesday. I don't want Japan. Okay. Most importantly, we had the testimony of Powell, which was quite hawkish. So on Tuesday, the 11th, we had here a quite hawkish speech, as you can see on the was later in the evening, and gave us was of course not the only reason, but was part of the reason of some gold sell-off after technically the price reacted to these previous lows. And most importantly, on Wednesday we had the CPI. So as we talked about, the CPI, Consumer Price Index / inflation, made a new high at 7%. This is the figure that has been reported, was higher than the previous, but was as expected. The core was 5.5, still higher, 0.5% higher than the last one, and even higher than expected. So it's a very strong figures on the inflation, which came out on Wednesday the 12th. And as you can see, even though there was on the lower time frame a huge, it's very whipsawy, not clean candles, we indeed made our way up to this the lower of the band. Again, we first reacted exactly, as you can see, first reacted here, as you can see, but then we went up to this level and we made a double top. What it means is that possibly this whole upside move that were coming from the previous days was slowly, but investors already pricing in the inflation data. I mean, was expected the 7%, and wasn't like, if this one would have been like 7.2, 7.4, 7.5, then even though the investors priced in already the 7%, would have been probably above 1830, because there would have been a surprise on the markets. So as you can see, this was the CPI. We had jobless claims, which are not that relevant anymore. If you remember, the it was the 13. Yeah, this is New York session. If you remember, during the last year, during the pre-taper times, the narrative was strongly talking about jobless claims, NFP, unemployment rate. So even though the number was not good compared to previous, we are still in a very nice levels. And so yeah, we had from the 13th, the 13th of January, we had a very bearish move coming, bringing the price again to 1815, but it was not about jobless claims. We had again PPI, which was still high, 8.3%, still not making a top. As you can see, above 7.9%, that was the previous one. As you can see, high PPI, but then bearish move. Yes, because all these was already pricing in the inflation data, and we know that at these levels of inflation, the Fed is very bullish and very hawkish. So it's very likely that they will push the interest rate hikes. And we're already talking about doing that second quarter of 2022. Then on Friday, what we had here was, as you can see, red figures all across the board. Of course, some are not important, but the retail sales are, and the retail sales are very bad. Came out very bad. And as you can see, even though probably we had a spike here, let me go on the 1 minute. So on Friday, yes, we had like 40 pips in the last few minutes, in the first few minutes of the news report, being very bullish due to the on gold due to the negativity for the dollar represented by the bad retail sales. But as you can see also, if you don't know fundamentals, this was a clean break and retest and just moving regularly on as a time frame on the 1 minute. So as you can see, the retail sales are not impacting that much because it only gave like, as you can see, the 30 pips was not very relevant, even though the numbers were really bad. And afterwards, price already retraced to 1815, and we are here. Now the last few hours of Friday were quite bearish. We will need to see if on the Monday open we will have some start of bearish moves here, possibly to go revisit these previous highs. But let's go and see what is going to happen if we have any relevant report next week. Nothing relevant on Tuesday, nothing relevant on Wednesday. Jobless claims. No, next week is quite empty regarding the USD reports, so we're going to have to see it technically, or maybe following some headlines from the Fed. Okay, so let's jump into Bitcoin analysis. As you can see, is starting from January, after this first very aggressive bearish move at the start of the year. Yes, we are keeping a very strong bearish outlook after making after these 52 highs, and we broke, and we are very bearish. If we trade trend lines, this is a possible reversal, but as you can see, we are still in this, still need to break above these highs, these lows. We still have this sensitivity area. But as you can see that after making a triple bottom over here, after making a triple bottom, the price has started on the hourly time frame make possibly new higher lows, higher highs. Now we still have to make a new higher high to possibly continue bullish. But this is not a uptrend unless we break above this previous lower high, or even better, above this previous high time frame lower high, because we need to make a new higher high in order to have the confirmation of uptrend on the high time frame. No news or reports on Bitcoin, just technically following the price. And 5th of January, okay, was not any news. So that's it for Bitcoin. I mean, it's not doing anything special at the moment, and we are going to just trade the technicals on the intraday time frame. Yes, this looks like it, but don't forget that we are in such strong bearish move, and we connected these. We are still in a very strong bearish trend line, and maybe we are just making pullback and then going below this level, a continuation bearish till 30k. So the trend line don't just work by themselves. Okay, let's have a look on euro dollar. I'm starting to have a look because I will start again trading it on a scalping time frame, and because I found my levels of reference, and what we can see on the high time frame is that the price is already made, as you can see, slowly from November, even though it was very, very whipsawy. It was, yes, a consolidation, but we were ultimately making higher lows with some implied strength of the euro. We actually made this in the last few days, the 12th of January. This was with the inflation data. The euro spiked up, not because of the euro strength, but because of the dollar weakness with the inflation. I mean, inflation means that each dollar has less value. Therefore, there was this huge spike up of around in total 100 pips move that reacted. Let's see if we have any specific price sensitivity area. The only thing I see is that reacted over here, made a double top, and is now following below. Now, of course, we can still have the retracement to this level, double bottom and go up or go down. But let's see, this is a very strong PSA. Let's see what happened on the Eurozone last week. We had the unemployment rate, which came out. So we had a very good investor confidence index. We had a better unemployment in Italy. Unemployment rate in general for the Eurozone was the same as expected, but was 0.1% less than prior. We had good retail sales in Italy, good industrial output in Spain. We had ECB Lagarde speech. I don't know what she said. We had good industrial production, but over year still bad. Other members speaking of the ECB economic bulletin, which is like, I think, the beige book of the Fed. I don't know what they said. Trade balance minus 0.5. That means it's less than a lot less than prior, and I think it means that the Eurozone as a whole is importing way more than exporting. And we had on Friday another Lagarde speech. So I don't know if also on Friday this very aggressive bearish move was also due to some what's the word, dovish speech from Lagarde, talking about delaying the interest rate of 2022, etc., etc. But I mean, on Friday also, yeah, we saw also on gold. On Bitcoin, not too much. Let's see on Bitcoin on Friday. Yeah, also Bitcoin went lower. So we had a strong dollar as a whole. So it's not about the euro weakness. I think it was about exactly as you can see. Friday was a good dollar movement, overall bullish movement as a whole of the dollar index against all pairs. And this is it. So this is the usual weekly recap. Let's see you guys during the week.